All right. Good afternoon, everybody. Let's go ahead and get started. Let me know if you guys can hear my audio and see my screen in the chat box. Just give me a little Y or a yes there, just to let me know that it is indeed working. Hope everybody's having a fantastic afternoon so far. Hopefully your trading's been going well. I know our trades from the scanner have been doing great this morning, so that's exciting. Good start to the week. So hopefully we can continue that throughout the rest of the week, that success. But let's go ahead and jump into this. Also want to give a shout out to everybody here. Want to give a shout out to those watching this in the recording. Want to say hello to you guys and welcome you here to participate in any way that you can. Or if you have questions, feel free to ask those questions in the chat box. If you have questions in the recording, feel free to ask those questions in the comment section down below. But let's go ahead and get started. As always, I need to remind everybody about the risks involved in this market. You can lose all or more than your initial investment if you're not careful. So please be aware of how many pips you're risking on each trade, in addition to how big your lot size is and ultimately how that would affect your account if you were to lose money. All right, guys. Well, so today I want to talk about chart patterns. So I had a couple of people ask me to go over the different patterns in the market just to help you guys read the candlesticks a little bit better. So we've got several different chart patterns I want to go over that I've been using for years. I want to give you a couple of tips and tricks, also some disclaimers on patterns and their best practices. Not every chart pattern is going to work out, exactly the way we describe it to be. So I want to spend most of my time showing you live examples of patterns so that you can have recognition of them going forward in the future when you're looking for your own trade opportunities. But let's go ahead and jump into this. So these are actually the chart patterns I wanted to focus on. So the most basic pattern, or one of the more basic patterns, is called the double top or the double bottom. There's triple tops and bottoms. There's the shoulder patterns. There's wedge patterns, rectangles. There's pennant patterns, flags, and other types of triangle patterns that we'll show you. One of the things I wanted to share as we discuss chart patterns today, guys, is that chart patterns should not be the primary reason you enter a trade. When I first discovered chart patterns, oh my gosh, like almost a decade ago, when I first discovered these patterns, I got so excited. I actually pulled out a little notebook and I wrote down every single pattern, and I put a little summary or profile for every single pattern that I could find in the market, and I was just excited to trade them. But then I was kind of disillusioned when one pattern would not win. I thought they were always supposed to win. So patterns should be kind of like this way to get yourself into the market as confirmation. So I consider it a like for me right now, I care more about like other fundamentals, like for example, the COT report. If the COT report indicates a buy or a sell for the week, to me that really matters as far as leading my direction or bias for the week. And then if I can find patterns on order blocks like we talked about this morning in the live trading webinar, if we can find those things and confirm, so using fundamentals to have a driven bias, and then find patterns to confirm what we're looking for, that can help us get a better entry. Okay, and use proper risk management. We actually took a trade on the euro yen this morning. It's pending right now, as we'll see if it triggers. If it does, I'm looking forward to seeing if that one works out, because it's got a good risk management ratio on it, RR ratio, and so on. Anyway, so that's what I'm hoping to accomplish today. So let's talk about some of the basic patterns. I do want to spend more time kind of jumping into the charts themselves, and really just any chart. We can pick any time frame. It doesn't matter the time frame. It doesn't matter the currency pair or the stock or symbol. It doesn't matter. We can look at literally anything. So let's just go back and let's look for just a double top pattern. Yeah, here you go. Like literally there's patterns everywhere, guys. So right here, this is just the euro yen. It's just the first chart I had pulled up. Um, a couple of places where there was a double top pattern. So a double top is basically where you have a market that comes up, forms a high, right? And then comes down again. That doesn't necessarily matter too much how far it comes down, but when it comes back up, it forms another high. Okay, so this is a double top. So they should be approximately, about the same, they should line up about the same spot. They don't have to be exactly, pip for pip right next to each other. You can see this high is actually a little bit lower than the previous high, but that's considered a double top pattern. And typically what you're looking for when you're trading a double top pattern is
Hey traders, it's Steve from the future. I hope you have enjoyed this video so far. If you are getting value out of this video, be sure to hit the like button, click the subscribe button, and share your trading thoughts. I read all the comments, so feel free to ask any questions you have there too. On a side note, I host live trading calls like this one you are watching every day. Some of my biggest trading secrets I share exclusively to just the members in my program. I host these live trading calls every day, Monday through Friday at 11 a.m. Eastern. I also host a basic training webinar every Monday for the newer traders and the regular COT report and sentiment trading webinars every Wednesday night at 8 and 9 p.m. Eastern for the advanced and aspiring traders. All of these calls are recorded and promptly posted on the members' trading calendars at the conclusion of each call in case your schedule does not permit you to come to the live call. All of my members have complete access to the scanner. We call it Steve Scanner. This is an institutional grade trade alert scanner that picks the direction of the week on all 28 major currency pairs and includes trading instruments like gold, silver, NAS 100, US 30. Just in the last 90 days, I have made over 3,000 pips just taking the top trade signals from the scanner at the beginning of the week and then just holding those trade alerts until Friday. If you want access to the scanner, you can start a 14-day free trial with the join link in the description to get started. Lastly, if you really want to be a full-fledged VIP member of my program to get access to things like the basic training course, live signals channel, Steve's scanner, trading calendars, and the one-on-one calls with me throughout the month, you can use code Friend of Steve, that's Friend of Steve, no spaces, at checkout and save $50 on your first month. Again, just click the link in the description below and apply that coupon to become a VIP member, and I look forward to helping you with your inevitable trading success going forward. Now, back to the video.
you want to see the market come down after it subsequently makes this double top pattern. With this one, the more aggressive entry would be to get in as soon as the double top forms. That's very aggressive. If you want to wait for confirmation, you could do something where, you wait for it to form there and then you wait for it to come and break below the, the neckline that it formed right here, and then get in after it breaks lower. See, that's not a bad way to use a double top pattern. But again, when you guys trade this type of, if you're going to trade this style of trading where you're using patterns, I would suggest that you not just trade the pattern alone, make sure it conforms with the trade you want to take. So for example, as you guys know, this week, the euro yen, I'm looking for sell opportunities. So actually a trade that we took is over here. Uh, um, I'm not sure why it's not on my chart anymore, but I had some analysis to sell. I think it was kind of up in this liquidity zone right here. I have a pending sell order right up in here. And so if the market comes up into there, we're going to sell, and we'll actually talk more about that trade later, but that's one we're waiting for right now. It has more to do with liquidity, not so much a pattern. Patterns will often show up as consequence of liquidity, but not necessarily the other way around. So, like patterns will show up just by default because of the nature of liquidity. And we'll talk more about that. In fact, I see another pattern here we'll talk about in just a moment. That's a good example. I see a really good one here. But that was a double top that I just showed you guys right there. So a double bottom is just the exact opposite. So let's find a double bottom. Just find two. Yeah, here's a double bottom right here. So right here, you've got this low on this euro yen, and then you've got another low right here. Okay, so they're about the same, level, not pip for pip. That doesn't matter. They're just about the same. Basically, when these form, you want to look for the market to bounce up from here. And the more aggressive entry is just to get in right away. As soon as it forms, as soon as it returns back to the old low, you could get in to buy and look for a move to the upside. Or you could, that's pretty aggressive because some of these could actually just continue lower, right? So that is aggressive and you could stop out and lose some money doing that. The more conservative way would be to wait for the market to, start to break up from here. This neckline up here would be all the way up here. So you'd have to wait a while. Like that almost never triggered actually. If you put your entry all the way up there. So you might have to look for an entry that's a little bit sooner. As this starts to come up, you could look for an entry to buy type of thing. So that's a double bottom pattern. Okay. Those are really, really basic. Triple bottoms and triple tops, those are harder to find. Let's see if we can find a few. Actually, I see a triple top already. So you could, there's actually a couple of ways you could look at this. This is a top right here. Anything could be a top or bottom. This is another top. I guess you could say that that's another top, but they're pretty close together. So I'd probably look for one like that. They're more separated. And that would be a triple top because you have a high here, a high here, and high here. That's a triple top. As soon as the market comes up to the triple top, you could go ahead and sell. That's aggressive. The other way you could do that is wait for the first break of structure of the pullback from that triple top, which would be right around here. And you could start to sell as soon as that occurs. That's not a bad way to go. A triple bottom's the same thing, just on the opposite side. So these are all reversal patterns, by the way, if you're curious. That's what we're talking about here. Let's see if we can find a triple bottom. Triple bottom. These are harder to find because they're not as common. That's more of a double bottom. Triples, though, again, I think, yeah, this is a triple bottom. It's actually a quad too. There's a lot of bottoms to this. So let's just go off of this guy right here. Right there, that's a low. You got another low right here. This is actually the apex low. And then you've got another low right here. And all of these lows, they're not pip for pip the same, but they are pretty close together. And that's a triple bottom, right? And this at one point was just a double bottom, and that worked out just great. And when it formed this triple bottom, it pulled up. Again, aggressively, you could just get in as soon as the market comes back down to this. That's an aggressive entry, and you could just get in as soon as it comes down. Or you could wait for it to come down, and then as it starts to make its approach back to the upside, then you could go ahead and make your entry to get in. But please, again, for those of you that just logged in or just watching this now, when you're using these patterns, don't just trade because it looks like a triple bottom or any other pattern that we discussed today. Please use this as a confirmation tool. Use patterns in your favor after you've confirmed it with other leading indicators. I think that's the best way to use patterns. Because you will have several losing trades with patterns, and it might even not be a profitable venture for you. If might not even be profitable for you if you're just trading the pattern alone. This is actually jam-packed with a lot of patterns, so I'm just going to stay right here in this area. Let's actually move on to the next pattern. I'm probably skipping a few, but I'm actually just going to highlight every single pattern I see here. So this is a really common one. This is just glaring at us right in the face. Does anybody know what this, like basically this area right here? You guys already know what I'm going to draw out. What is this pattern right here? Anybody want to shout it out in the chat box? What did I just draw out right here? What's this called? Yep, Roger, you got it. 100%. Yeah, so it's a head and shoulders pattern, right? Nice work, Roger. So this is called the head and shoulders. There's a lot of psychology that goes into a head and shoulders pattern, but basically what's happening with these types of patterns is the market initially comes up over here, market comes up, forms what we call a shoulder or a high. At the time, it's just a high, and then it kind of pulls back a little bit, but then it makes one more leg up to the upside, forms what we call an apex high, which is also known as the head. You don't know that it's a head yet because we haven't formed the other shoulder yet. But when this happens, it forms another high. Now, what's happened so far is you have a big leg to the upside, followed by a small move back, followed by another leg to the upside. Now, this leg to the upside is not as aggressive as the first leg. That's important. Then what's also important is you get a move backwards, and this move backwards is the most aggressive move backwards since the bullish rally. Okay, and it moves backward insofar that it comes back to the shoulder line right here, and then what forms what we call the neckline. Well, this is actually technically the neckline right here. We'll talk about that in just a moment. Then it comes up, makes one last ditch attempt. The bulls try one last time to send this higher. It ultimately fails, and it's a weak and somewhat pathetic attempt to send the market to the upside. Ultimately fails, and then the market falls off a cliff, like you see right here. So, a couple of ways you can enter. If you're fortunate enough to be able to find one of these as that shoulder's forming, you can just get in as soon as that shoulder forms, that last shoulder. The more conservative and safer entry with a higher win rate would be to wait for the market to break below this neckline right here. So you'd have an entry. So what you would do is you would wait for this to form. Once it's formed, you could go in and place a short right there and just wait for it to pull back. Um, um, just wait for it to pull back from that neckline right there and get in that way. That's not a bad way to go. That's actually this is one of my favorite patterns actually. So that is a head and shoulders right there. So we found a pattern here. Here's another pattern. This thing is jam packed with them. Here's another one. This is a reverse head and shoulders right here. So right there, you can see it's the same exact thing, just on the opposite side. So you've got a move to the downside, then you've got a little move back, sharp move to the downside, forms an apex low, comes back up to the shoulder line, tries one last ditch attempt to send the market lower, ultimately fails. It's a pathetic attempt to send the market lower, creates a leg to the upside. Okay, so you actually have a head and shoulders pattern, reverse head and shoulders pattern first, then a head and shoulders back to back. Really, really cool. This would be your neckline right here. So you could look for an entry to get in as soon as it breaks the neckline. It's up to you how you want to do your stop. I think most people put their stops at the other side of the shoulder. You can do halfway of the shoulder, whichever way you feel is best, and then you just ride that up the other way. That's a great little pattern. Again, please confirm it with the other things that you do in the markets, but that's not a bad way to go. What other patterns are in here? There's a ton. Just looking at this one chart, guys, we could analyze charts for days. I found another one right here. Let's actually delete this so I can draw it out. This is a little pattern right here. Anybody know what this is called? Right here, I'm going to give you a little clue. So this right here, and here's the clue right there. Okay, so what's this called? Anybody want to get? There's actually a couple of names that I would accept for this. There's a couple of things you can call that pattern right there. Anybody know what this is called? Yeah, flag would work. That's fine. That's definitely fine. Yeah, rising pennant. Yep, exactly. A bull pennant pattern would be also a very appropriate thing to call this. I think it's more of a pennant than a flag, but it is also a flag. It's I'd be remiss if I didn't call it a flag. So both of those answers are correct. So yeah, this is absolutely a flag. So what's happening here? These are some of my favorite types of patterns. This one right here. Why do I like this pattern? So this is kind of cool because what's going on here is you've got a market that had a nice leg to the upside. So pretty bullish move, right? And then it follows this contraction. Now, what happens in this contraction is it's kind of coiling into a corner. It's kind of like compressing into either a triangle. We also call that a pennant. You can this one might even be fine to call it a symmetrical triangle, um, or a flag. It's flagging. So when something's flagging, it's coiling up into a corner, and ultimately is going to create a breakout. Now, often which way is this going to go? The clue is what preceded the flag or the pennant. What preceded it was this move to the upside. So in all likelihood, you're going to see one more leg to the upside when it coils like that. And that's exactly what happened, is it just continued to the upside and made another leg after it coiled like that. So that is we'll call that a pennant, symmetrical triangle, or a flag. That's totally fine. Other patterns, guys. Let's see. There was actually a little head and shoulders right in here too. Not as good, but yeah, that's the head and shoulders. What other patterns do we have here? Um, there's a lot just looking at this one chart. Oh my gosh. Um, anyway, let's move on. So we haven't talked about, let's see, what else have we have not talked about yet? We still need to talk about descending triangles and ascending triangles. Wedges we haven't talked about, and rectangles. So let's see if we can find some of those. One of my favorites is the descending and ascending triangles. So let's see if we can find a few of those. And then along the way, we still haven't talked about bear flags either. So let's see if we can find a bear flag as well. This is actually more of a flag, in my opinion. So this is a flag pole right here. And then the flag is more of a rectangle that is tilted like that. Okay, so this is more of a flag to me. It's perpendicular with the flag pole. Okay, so that's what you're looking for, and that's more of a flag in my opinion. And when you see that, that is a move. Usually that's going to send the market even higher because it's preceded by a move to the upside and then it starts to flag like that. Usually the flag will not go below the 23% level on a Fibonacci. And if you can get an entry at the 23% retracement on a Fibonacci, that's usually really, really good on a flag or a pennant. Yeah. Okay. And let's see, here's another flag. Actually, this is another bull flag right there. Actually, yeah, I was going to say it might qualify as a wedge, but no, it's more of a flag preceded by a move to the upside. That's a flag pattern. Well, what else? Okay, here's a bear flag, not as good, but you've got a bearish move right here. And then you've got this little, um, triangle right here. Not triangle, this rectangle, and then ultimately the market pushes lower. So that's a bear flag. I still got to find that rectangle. I want to find you guys a solid bear, not rectangle. I want to find a bearish or a bullish ascending triangle. Those are really, really good when I can find them. Those are usually really, really good. Trying to find a good one. And they don't come up as often, but they're, like I said, they're usually pretty dang good. And I'm just looking at the charts here. Okay, yeah, here's one. So here's an ascending triangle. So this I love. This is a great little pattern. Basically what you've got is a market that's come up and formed a leg to the upside. Okay. And actually let's draw it like this. There you go. And then you've got a basically a cap on the market, this top area. And then you've got this triangle that starts to compress the market up into this corner. And we call this an ascending triangle. Okay. And it puts this cap here at the top. And eventually this pressure builds and builds and builds all the way up into this corner. And at some point, it's going to relieve that pressure. And typically, if the market's preceded by a move to the upside like it is here, that's usually going to cause the market to continue higher, just like it did. Okay, so that is an ascending triangle pattern. And that's actually a pretty good one. I want to find you guys a descending triangle because those are also, I mean, it's the same thing, just on the opposite side. I'm just trying to find you a really good one. By the way, we've passed a lot of different patterns. I'm just trying to find a very specific one right now, and that's why I just continue to search here. But um, here's a reverse head and shoulders here, reverse head and shoulders, and that's usually a move to the upside, which obviously happened. Um, Yeah, I just not seen. It's kind of a more of a rare pattern, um, because it's very specific. Um, yeah, it's very specific. Okay, here's another bullish example. So this is you actually got a lot of patterns right in here. So here is your top, and then here is your um triangle. That's an ascending triangle, right? And again, it's preceded by a move to the upside, right? So this is an ascending triangle. This is a really good one, actually. This is really, really, really good. You've got multiple touches here, and each time the market touches, it's stuck. It doesn't break up. And then you've got this triangle down here that's compressing this market all the way up into that point. And then ultimately it has to be relieved as it gets compressed. Usually, just so you guys know, this typically happens during some kind of like um, this can either happen at a news event where it's an appropriate time for pressure to be released, or this could happen during like a session open. So I would guess, or I wouldn't be surprised if this probably started to occur around the Tokyo or Euro or Tokyo Open, London Open, or New York Open. So basically, these triangles and these patterns, the ones that compress, those are some of my favorite. A lot of them typically compress like during off hours. So this is compressing during like my guess is this time period right here is like the Sydney session or like the end of New York. And it's just kind of consolidating for the rest of the day. And then all of a sudden, right around here, you get to, it looks like this is actually the Tokyo Open. And as Tokyo opens, that thing starts to rip. And then right here is, this is right where my cursor is. That is the London Open. And then the rest of London, let's see, London closes about right here. The market's already expanded. So yeah, in that short period of time while London was open, all of that expansion basically took place. So that's what just a little tip when you're trading these patterns, especially the ones that compress like this. You want to look for these when around sessions when they open, uh, because that's when they're likely to take place. And again, make sure it's appropriate for the currency pair that you're trading and the time frame that you're on. So obviously trading the euro would make sense during the London, or the yen during the Tokyo Open. That makes sense for a breakout. And the time frame makes sense because it's an hourly. But if you were trading on like a daily chart, well, the sessions don't matter as much because you're on a daily. If you're on a 15-minute, 5-minute, or an hourly, that's really good for trading sessions. Okay. And looking for patterns that are more likely to break out at a session open or a session open or a news event type of thing. All right, what other patterns have we missed? Okay, so any other questions so far? Oh, Lee says USD JPY chart looks like it's forming a bear flag H1. Let's definitely go take a look at that. Thanks for bringing up that suggestion. If you guys have questions, get those questions in the chat box or in the comment section down below, and we can get after those. Yes, this is awesome. Let's break this down. There's actually a couple of things going on here, Lee. Let's break this down. This is something we actually talked about today, or at least not in a lot of detail, but we did mention that there's demand down here on the USD yen, so it's probably not done going down yet. That's one of the things we discussed, is that the USD yen has more to go to the downside by the end of the week. So let's break this down. This is actually not bad. So on the H1, your bear flag pattern. Yeah, I see that. I think it's more manifest though. I can see what you're talking about. It's going to look better on a 15-minute. So this is it right here. So a couple of things happening right here on the USD yen. So it is basically flagging because it's in this consolidation, but here's what I really love about this. It's in a downtrend already. So it's already in a downtrend. And it just barely formed. What's this? What am I doing here? This is basically a head and shoulders pattern in a bearish market, right? So this is your neckline right here. So that looks really, really good. I bet it looks even better on the 5-minute. Yeah, probably looks even better. Yeah, it looks really good actually over here. So on the 5-minute, you've got your apex high on the 5-minute, and then you got a shoulder there, a shoulder here. This actually already broke below its neckline right here. But I would also say this is like a head and shoulders with head and shoulders, because these are also, this is the neckline I was talking about on the hourly or the 15-minute chart, or the shoulder line rather. So this is extremely bearish right now, guys. Like I said this morning, anybody who's buying the dollar yen this week's going to have a terrible Thanksgiving. So, again, I that's my expectation. So I'm gonna have a good Thanksgiving no matter what, but I'm trying to squeeze some money out of the market by shorting these dollar yen and euro yen pairs by the end of the week. Those seem to be the I think the franc yen was a good one too, if I recall. Franc yen short. Those are my big focus pairs for the rest of the week. And this one does certainly have more to the downside until you get, oh, I deleted it, dang it. There is demand down here somewhere. It's like 50, 70 pips away. So yeah, absolutely. Looking for bearish opportunities here. What else is going on with this? That's on a 5-minute. Let's go back to the 15. Yeah, that's basically what we're doing. So, okay, what other patterns do we need to get to before we wrap up the webinar? So we looked at head and shoulders. We found a ascending triangle. I still haven't found a solid descending triangle yet. Well, yeah, it's not, well, okay, this actually counts. So it's not the best one though. Let me show you. So this USD yen is in a, as you guys know, it's bearish. This would be a descending triangle. Okay, so here we are in a live, this is actually best, a live example. I just don't really have that third touch really. So I was hoping for, here's a point A, here's a point B, and then I'm calling this a point C, even though it hasn't quite touched yet. But you do have that flat line down here. So everything's just compressing right now, compressing. And then ultimately, when this is done compressing, what's the expectation? Probably a move lower is the expectation. Now, I have seen some of these, just so you're aware, I have seen some of these actually go up a little bit first, and then kind of manipulate a little bit, tag everybody out, and then they wind up going down. So just be ready for either one. But my overall call on that is to send this pair lower right now. I would not be buying the dollar yen. Just not a good time to do that. Okay. But that actually is a bearish descending triangle. That's literally what I was looking for. And there's a live example right there. So that's pretty cool. Okay. What other patterns do we need to get to?
Hey traders, it's Steve from the future. I hope you have enjoyed this video so far. If you are getting value out of this video, be sure to hit the like button, click the subscribe button, and share your trading thoughts. I read all the comments, so feel free to ask any questions you have there too. On a side note, I host live trading calls like this one you are watching every day. Some of my biggest trading secrets I share exclusively to just the members in my program. I host these live trading calls every day, Monday through Friday at 11 a.m. Eastern. I also host a basic training webinar every Monday for the newer traders and the regular COT report and sentiment trading webinars every Wednesday night at 8 and 9 p.m. Eastern for the advanced and aspiring traders. All of these calls are recorded and promptly posted on the members' trading calendars at the conclusion of each call in case your schedule does not permit you to come to the live call. All of my members have complete access to the scanner. We call it Steve Scanner. This is an institutional grade trade alert scanner that picks the direction of the week on all 28 major currency pairs and includes trading instruments like gold, silver, NAS 100, US 30. Just in the last 90 days, I have made over 3,000 pips just taking the top trade signals from the scanner at the beginning of the week and then just holding those trade alerts until Friday. If you want access to the scanner, you can start a 14-day free trial with the join link in the description to get started. Lastly, if you really want to be a full-fledged VIP member of my program to get access to things like the basic training course, live signals channel, Steve's scanner, trading calendars, and the one-on-one calls with me throughout the month, you can use code Friend of Steve, that's Friend of Steve, no spaces, at checkout and save $50 on your first month. Again, just click the link in the description below and apply that coupon to become a VIP member, and I look forward to helping you with your inevitable trading success going forward. Now, back to the video.
I haven't really found a rectangle, and it's just really simple. They're basically like pennants, like flags. I want to find just like a solid symmetrical triangle that's not really biased. Some of those just show up out of nowhere. Here's on the dollar euro, and again, this is on a 15-minute chart now. This is actually a bearish, you can call this a flag or a pennant. I'm going to call it a pennant. That's a bear pennant right there. And again, how do you know which way the market's going to go? Look at what preceded the pennant. Oh, it was a move down. So if it was a move down and then a pennant formed, in all likelihood, it will continue lower. Like it'll do the same thing that preceded whatever happened here. And since that was a move down, the expectation would be to send this lower as well. And that's literally what happened. So okay, like I said, I'm still looking for a rectangle. Here you go again. Here's another little pennant. And then you've got this right here. That's not a great one actually, but you know, it's still that, and that was a news event that caused that. Not that that matters a ton, but just letting you know that I can tell that was a news event right there. Here's a flag, another flag again, another little flag. Still trying to find a symmetrical triangle. And again, I'm passing tons of patterns right now, just so you guys know. It's not that I'm not finding patterns. I'm just looking for a specific one to show you guys. This is kind of this is a symmetrical triangle, but I think you'd call it more of a pennant. And actually, you could line this up right here. There you go. This is better. That way, everything touches. That's a symmetrical triangle. Yeah, that works. But again, how do you know which way it's going to go? What preceded it? What preceded this? Well, it was a move to the upside is what preceded it. So in all likelihood, that will continue to break to the upside, right? Okay, here is another descending triangle right there. Descending triangle. Which direction do those usually wind up? At once it finishes compressing, once this market stops compressing right here, it usually breaks to the downside, right? Okay, I think that's about it, guys. I think that I covered most of these. Just the only one I'm still missing is the rectangles, but those don't matter as much, and they're not as probable, I would say, as like the pennants. So my if I could break this down for you guys, my favorite patterns would be to trade flags, pennants. I love the head and shoulders. I love ascending and descending triangles. Oh, I need to find you guys a wedge. Actually, yeah, let's do find a wedge real quick and then we'll wrap up. So a wedge is basically, okay, let me just find one so I can just show you rather than try to explain it. Um, yeah, we'll wrap up on the wedge. Let me just find you a good wedge real quick. Is this one? No. Give me 1 second, guys. I'm just trying to find a good one for you. That's a nice little flag pennant pattern going on right there. Um, oops. There we go. Yeah, the wedges don't happen as often, but they can be pretty good if you can find one that matches your fundamentals. They can be pretty dang good if you can find them. Let's see. Okay, yeah, I found one right here. This will work. And I probably did skip a few others. I was just going quickly. So this is kind of a wedge. Yeah, this counts. So right here, what you have is a market that's um like coming down, but it's coming down into this. See this? This is called a wedge right here. So basically, um, you've got this nice um trend line right here to the downside, but everything is just kind of funneling into this corner. It's not necessarily a pennant or a flag, although some people might call it that. Everything's just kind of compressing into this corner, and it's tilted. So it's like basically a pennant. Instead of being upright and horizontal, this is more of an angled pennant, and that's called a wedge right here. And this is very similar to the other ones. As this compresses into a corner, this will have to relieve pressure. And which way will this usually go? If the wedge is pointed down, then it usually sends the market higher, especially if the move prior to the wedge was up, which this was. The move prior was up, the wedge comes along, and then sure as heck, that thing just went to the upside. So that is a wedge. I'd love to find you, and we probably don't need to spend too much time on this, but I'd love to find you a bearish wedge pattern. If I could find you one, I'd love to get you, I'd love to end off on that. I'd love to find one. I just not quite seeing one. Yeah, that's okay. That's the end of the data there. So, okay. I think that's good enough though, guys. I think that was good to show you several different patterns that I use. And lastly, just as a best practice when you're trading these patterns is try to confirm it using the scanner. Like when you're on here, let's say you're just pulling up a chart for fun, just to look for a trade opportunity on a 15-minute or an hourly time frame, which is really good when you're trading sessions in conjunction with the patterns. Um, if you're just on here and you look and you find an opportunity, see if it matches up with the scanner. So, like Lee mentioned, um, he says, "Hey, look, the H1 chart looks like it's forming a bear flag on the USD yen." Great. So that's a statement saying, hey, it might go to the downside. Well, great. Does that match the scanner? Well, let's see the shift this week. Oh, sure as heck. Yeah, it's a negative shift. So yeah, that's probably going to be a good trade, right? See, that's the way I would like you guys to use this throughout the week is again, nothing's guaranteed, but like that's a great way to use this is, hey, does this pattern that I'm seeing in the market line up with the data that we have? Oh, it does. Great. Maybe that's going to be a trade opportunity worth getting into, right? So all right, guys. So we'll see how this plays out. It's probably not going to do much the rest of the day. A lot of these pairs are cooling off. It's the afternoons, right? So we're kind of chilling out, not doing a lot with our trading. Tonight, when Tokyo opens, you'll start to see things move again. But even then, you may not even see a lot of movement until London tonight. So really, just kind of keep your hands off the controls. I'd say, unless you're just trying to study. I think that's a great thing to do right now if you've got nothing else to do. So. All right, guys, we'll go ahead and wrap up. Appreciate your attendance today. Thanks for coming, and we'll see you guys in the next webinar.